Let's start with something genuinely interesting. Kaspa has institutional infrastructure support that most projects would kill for. Futures listings on Binance, futures listings on Coinbase. That's not casual, that's the result of internal review, demand assessment, and risk evaluation by the world's largest crypto exchanges. Major exchanges don't list futures for projects they don't believe in. They're risking capital, they're risking reputation, they're risking regulatory scrutiny. The fact that Binance and Coinbase independently decided to list Kaspa futures means they conducted due diligence. They evaluated the technology. They assessed market demand. They concluded that Kaspa was worth supporting at institutional level. And yet, the market prices Kaspa as if that never happened. That's the paradox. Institutional recognition exists. Retail price discovery ignores it. The gap between those two realities is creating persistent undervaluation. Here's what Kaspa Hub has identified as the core issue: persistent ghosting mixed with repeated fear narratives that lack technical backing. Think about how information travels in crypto. Negative commentary spreads through Twitter, Reddit, Discord, YouTube. Someone makes a claim about Kaspa without technical depth. No data, no evidence, just narrative fear. That spreads. It shapes sentiment. People accept it as true. Then technical clarification arrives, real facts, measurable fundamentals. But by then, sentiment has already shifted. Perception damage is already done. The clarification arrives too late to matter. This happens repeatedly. Weak claims spread widely. Closer inspection shows they're unfounded, but the perception gap has already influenced valuation. The market moved on those false claims before facts corrected them. Here's what creates the visibility problem. KAS price discussion revolves around speculation tied to short-term direction. Technical performance and network structure receive far less detailed coverage. Most commentary is, will KAS pump? Not, what is KAS actually building? That imbalance creates distance between real development and public perception. Kaspa continues scaling. Kaspa continues improving. But the conversation isn't about those things. The conversation is about whether the price will go up or down next week. That's not how you build valuation. That's how you create perpetual undervaluation. Real value recognition requires depth. It requires understanding what the technology actually does, understanding the adoption trajectory, understanding the competitive positioning. None of that happens when the conversation stays at the speculation level. Here's another critical distinction Kaspa Hub raises. Institutional recognition doesn't automatically drive retail adoption. An exchange listing futures on a project signals institutional awareness. It signals internal confidence. But retail markets don't necessarily follow institutional positioning. Retail traders are speculating. Institutional traders are hedging and positioning. Those are different motivations. Binance and Coinbase futures support confirms institutional level comfort with Kaspa infrastructure. But that doesn't translate to immediate price recognition because retail sentiment is driven by narrative, not infrastructure validation. That's the disconnect. The institutions that matter have already validated Kaspa, but the retail investors who move price haven't received the narrative that would make them care. Kaspa Hub raises something genuinely important. Rapid public clarification often follows criticism at major exchanges. Comparable acknowledgement rarely appears after Kaspa milestones. When there's negative commentary, exchanges issue statements quickly. They clarify. They defend themselves. That quick response shapes perception. People see the exchange defending. They assume the criticism had merit. They trust the resolution. But when Kaspa achieves milestones, development progress, community growth, industry awards, silence from influential voices is the response. No major figure acknowledging it. No mainstream media covering it. No visible institutional validation of the positive progress. That silence shapes perception just as much as active criticism does. When achievements get quiet acknowledgement and criticism gets loud defense, the market forms the impression that criticism is more important. Kaspa won a Blockchain 100 award. That's institutional level recognition. That's credibility validation from an outside body that reviewed and assessed the project. How many retail investors know about that? How much did that award move the price? Compare that to how much attention fear narratives without any backing receive. That's the visibility gap. Real credentials go unnoticed. Unsubstantiated criticism gets amplified. Community sentiment rankings on CoinMarketCap remain strong for extended periods. Outreach initiatives have attracted millions of views. Ecosystem activity continues. Network development progresses. These are observable facts, measurable signals, real indicators of project health. but the market isn't responding to them. The price action suggests the market doesn't even know they exist. Here's the fundamental insight. Across crypto markets, perception shapes momentum more strongly than raw capability, especially during uncertain cycles. That's not fair. That's not ideal. But that's how markets actually work. Kaspa can have superior technology. Kaspa can have institutional infrastructure support. Kaspa can have development progress and community engagement and industry awards. But if the perception is that Kaspa is weak, the price reflects weakness. If the narrative is negative, the momentum is negative. If silence greets positive milestones, the market assumes they don't matter. Fixing perception requires breaking through the noise. It requires getting the same amplification for positive facts that fear narratives receive. It requires institutional voices acknowledging progress with the same urgency they address criticism. Alright, if this breakdown of Kaspa'S visibility gap and narrative disconnect just changed how you think about price discovery mechanics in crypto, you need to understand the deeper dynamics of how markets price in institutional versus retail recognition. Most creators talk about technology and tokenomics, but there's an entire intermediate layer where narrative management and visibility strategy determines valuation more than the actual fundamentals do. If this analysis of Kaspa'S institutional infrastructure versus retail ignorance helped you see why perception gaps create opportunity, smash that like button right now. It tells YouTube this deep market mechanics analysis matters, and it helps us push this kind of sophisticated visibility gap analysis to more people who actually understand how markets misprice information asymmetries. And if you haven't subscribed yet, hit that subscribe button and turn on notifications. When projects have perception gaps, we analyze the actual opportunity. Let's keep going. Breaking through this visibility gap requires specific conditions: mainstream media coverage that focuses on facts, not speculation. Major institutional figures publicly acknowledging progress, not just defending against criticism. Retail content creators shifting focus from price speculation to technology explanation. Community growth translated into visible adoption metrics. Any one of those alone wouldn't fix the dynamic. All of them together could shift perception significantly. Alright, so here's what I want you to walk away with. Kaspa has institutional infrastructure support that the market is ignoring. Futures on Binance, futures on Coinbase, award recognition, community engagement, development progress. These are objective facts. And yet the price keeps reflecting weakness. Lower lows keep forming. The narrative stays negative. Why? Because narrative perception shapes momentum more than technology does. Fear-driven commentary without technical backing spreads faster than facts. Silence greets positive milestones while loud defense meets criticism. That imbalance creates persistent distance between real value and perceived value. Whether that gap eventually closes depends on whether visibility changes, not technology. Visibility. If Kaspa can break through the noise, if mainstream voices start acknowledging the institutional support, the development progress, the network growth, valuation will eventually follow. If the visibility gap persists, the market will continue ignoring institutional validation. For investors willing to recognize that institutional infrastructure sometimes precedes retail recognition, Kaspa'S current valuation represents opportunity created by narrative neglect. Thanks for watching TJ Crypto World. If this breakdown of Kaspa'S visibility gap and institutional versus retail recognition disconnect helped you understand how narrative pressure shapes price discovery, please drop a comment below. Do you think Kaspa'S visibility problem will eventually resolve or persist indefinitely? And before you leave, check out our latest video on how information asymmetries create crypto opportunity. I break down the exact mechanisms that separate projects priced fairly from projects priced at discount because of visibility gaps. The link is pinned in the comments. Stay analytical, stay curious about the unsexy fundamentals, and I'll see you in the next one. Peace.